Saturday, May 24th, 2:03 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Got to discuss the U.S. dollar index. U.S. dollar index has several currencies in the index that represent it. The first is the euro. Weighs in about 57%. Second is the Japanese yen, about 13+%. Third, the British pound, about 11.9%. The Canadian dollar, about 9.1%. Swedish crown, 4.2%. And the Swiss franc, 3.6%. Those are the major currencies in the US dollar index. The first three again: euro, Japanese yen, British pound, and the euro representing over 57% of the US dollar index. So if you're looking to invest, looking to trade, short-term, intraday, there are several currencies I'd recommend. Hey, I choose the good ones that I believe are good ones for several reasons. They have a tight spread, tight liquidity. I'm not looking to hoard currencies and put them under my pillow, in my mattress, in a can. I'm looking to have access to them, or I could trade them in and out any given time, even though I might be holding them in a broker for months or years, still have the easy access nearly 24/7 to get out of them. You don't have to just invest in stocks or commodities or real estate. Nope. Lots of other financial instruments. What impacts the dollar? What impacts currencies? Well, Western nations that have central banks, they have the authority to adjust yields, aka interest rates. Typically, when a nation raises interest rates, it strengthens their underlying currency. And vice versa, when you weaken the yields, lower the interest rates, you lower the value of the currency. Some of the reasons being this done is they want to make their currency cheaper for other nations, businesses abroad to buy products from their country, increasing, they hope, demand for their products, exporting their products. First, if you have a higher currency going higher, certainly makes your products more expensive. That's part. It's also the confidence of your country. When you have fixed assets like bonds, you want to raise capital by selling bonds so you can fund projects by the government, bridges, roads, schools. They want to have confidence you're going to pay them back when those bonds hit their calendar date to be cashed in. If they lose confidence or less confidence or devalue confidence, well, you could expect the value of your currency to decline, and you would more likely have to raise the yield, aka the interest rates that you're offering on those bonds to entice investors. In the financial markets, you could trade long or short. The term long means you're bullish, you expect prices to go higher. And the term short refers to bearish, you expect prices to go lower. In the United States, we have what's called stock ETFs, where companies manage these ETFs. Example, on the US dollar index, you could trade it in the futures market. There are several futures markets. Not everybody has brokerage accounts to trade futures. Well, in the stock market, you can still trade the US dollar. Bullish or bearish? Yep. Dollar cost average, that's one way. You buy fractional shares, that's another way. Or full value. On the left is the bullish stock ETF for the US dollar, UUP. And the right, the bearish UDN. See, they're trading inverse from each other. So again, when the dollar future goes higher, the stock ETF on the left mirrors it, goes higher. When US dollar index goes lower, The UDN trades inverse. Got it. I'm going to show you here. On the right is the US dollar futures market. Look, it's declining. And on the left, the stock ETF UUP, the bullish one, is trading the same way. See the mirror image. So again, if you're confident, believe, or want to invest in US dollar, you think it's going to go higher, you could buy it. Yeah, it closed Friday on the left, $27.37 a share. If you think it's going to go lower, you could trade the bearish stock ETF, UDN. You see it's trading inverse. It's going higher. The bottom right, on the grid on the left, the bottom right is the low of the year. It's trading higher. The US dollar index futures on the right is trading lower. Opportunities. Capitalist markets, Western societies offer wide variety of good financial instruments. Free markets, that's part of it, with regulation in place. So we're going to do a top-down. When I say top-down, it represents multiple time frames. I mentioned we're almost at the end of the month. This is a 20-year history of the US dollar index. On the bottom, look, I have the years representing in white. Below that, I have the terms for the presidency. Some served one term in a row. Some serve two terms in a row. Yep, some never finished necessarily the first term. History. And then some served more than that. The history. So look at the bottom left. Back here. That was the low of the US dollar index, 2008 for the past 20 years. 2008 was the low. On the top far right, 2022 was the high. And like I said, it's been trending down this year. Look at this middle gray box. Huge consolidation. Nice breakout onto the upside. Many people had the assets, because the dollar was strong, to travel abroad and have a better lifestyle. Living abroad, traveling abroad. Maybe some of those expats might be returning or moving if they find another place where the cost of living is less. So currently for the month, yellow candle. We haven't taken out the high or low of last month. Yellow horizontal line, look, the high of this year, the low of this year. Big red candle, this big impulse move down. We tested midpoint of it, rejected it. The momentum is down right now. Well, part of this is because the actions, the reason, the executive decision being made by the United States executive branch. 5-year chart, weekly. See this green horizontal zone? See this word here, accumulation, means there was more buying occurring, and then the prices got marked up. Then here, distribution, smart money was selling, and it was marking down. Got it? Here too, top center, distribution, marked down. It's being marked down right now, being marked down since the beginning of this year. This green zone was acting prior as demand zone, buyers. There's a floor of buyers, strength. We broke below it this year. Inside candle. Another break below it where some new sellers went, new bears went. What happens is when you have breakdown at key level, so see this big red candle, that blue horizontal line on it, it was an impulse move down. It broke this swing low here. That was a market structure. We had here consolidation, a markup phase. We broke it with an impulse move down, extremely bearish candle, broke it. As soon as we broke it, my alerts went off, sat on my hands, identifying it as bearish, opportunity straight bearish. Well, inside candle. We did not have a trigger yet. Nope, because you're looking for a retracement. That yellow candle was inside candle. Again, there's a retracement of that red candle. After that gets done, you're looking for a break below that yellow candle in the next candle. It occurred right there. Some people trade it bearish. Some people are still bearish in the positions. Some people close the profits, money management, making a new low for the year. Another opportunity is big impulse move down, red candle, midpoint. That was a sweet spot, the zone to look for the trade right there. Pin bar rejection. This past week, big red candle, impulse move down, broke below. Again, it was the first reversal after this retracement into this midpoint. Broke below it. Good entry, break below it on that green candle was the entry. Nice. More gains. Again, if you're late to the game, well, you might look for the opportunity, midpoint of this big red body, or labeled the zone. Target prices on the downside. Midpoint here on the till, that big wick, as well as the low of the year. Again, different time frames you could look at this doing. Looking if you could break that low of this year to go inside this zone. If you're looking for bigger gains, more risk, staying more exposed to it. Again, the lows of 2022. We'll see how it goes. Those are several trade ideas I just shared with you. You can do that multiple time frames. Daily chart. Yep. And here's the low, 2025, the yellow horizontal line. It's also a swing low. Then you had reversals, this big green candle, engulfing candle. We had a consolidation phase here. We have a swing low here. This purple line is a swing low. The market structure was what? Consolidation, breakout to the upside, more consolidation, breakout to the upside, staircase pattern, higher high. Coming into midpoint of this big red candle, big impulse move down, bearish impulse, midpoint, tested it. Market structure did what? Did a reversal. Swing high, green candle at the high, inside candle on the top. That's a bearish candlestick pattern there. You recognize it? It's a bearish harmony. Top of a trend, big green body, followed by a candle on the inside, which happens to be inside candle, top of a trend, solid body red. That's called a bearish harmony. And then we had the reversal. Market structure. Yep. So some traders trade it bearish on the break of that, below that green candle. Other ones are waiting for the market structure for the swing low to break here. If it breaks below that, then they're going to wait for the next candle, pull back. And after that pullback, looking for the trend reversal, might be the next candle a few candles later, and the trend reversal to trade bearish, looking for that break again at that low, that low. That's several good trade ideas I've just shared with you. Multiple time frames, you could look for these opportunities. Hey, again, I choose good financial instruments. If you're going to do it on some currency or any financial asset that's got wide spreads, low liquidity, the odds are more stacked up against you. Stay situation aware what you're trading. Things could change even with this currency pair or other financial assets. Got it? So notice the swing low. We're very close to it. And Friday, big bearish candle. Take it back here to the weekly, just to show you. The low of this year, the high this year. Most of the candles red on the weekly. Some huge trading ranges that have been bearish. None of them represent strong bull candles yet. We still have weak confidence in the US dollar index. It started this year, and it's reflected right here in the charts. So you might hear people or even see people only show you the daily chart, maybe only show you a shorter duration. I just showed you multiple time frames, the higher time frames. Well, next week, again, I told you, be the last week of the month. I highly recommend the last trading day of the month after the market closes to look at this to see if we break below it. Situation awareness. Thank you, as always, spending just a little time with me. That's it for the video. Thank you for watching.